Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report. And usually the first thing I do when I get to DailyFX is scroll down to click on Jamie's latest report. So let's see what he has to say. Reading the synopsis on top, candles and wave patterns strongly suggest that the U.S. dollar has finally reached some sort of top. Okay, so let's scroll down to the euro. I'm going to discuss that a little bit today as Jamie is calling for a potential bottom here. I proposed the count above in last night's day ahead. A lot of complicated Elliott wave stuff here, but just to summarize today, I'll read the last sentence today. The euro dollar made a key reversal. This is a bullish sign which supports the count above and a move back to at least 135. So when I pull up the charts, I'll explore ways that we might be able to get an entry based on Jamie's report here on the euro dollar. Now let's move down to the dollar yen, as that's what we have been focusing on lately on my reports. Longer term stay bearish as long as price is below 102.46 for the expected collapse, eventually below 80. So obviously Jamie is extremely bearish on the dollar yen long term. As I've mentioned, numerous times before, Jamie's been spot on in terms of the decline from the 110 area, the subsequent correction, then the subsequent decline, and then now this latest correction as well. So certainly keep an eye on Jamie's reports each and every day, particularly with the dollar yen, as he has again been spot on. So let's go ahead and pull up the charts and see if we can find some trades in terms of what Jamie was speaking about. Here is the euro dollar. This is a 60-minute chart. Now again, this is a very short-term chart, and the euro dollar has obviously been in a very strong downtrend. It's never a good idea to try and pick bottoms. But when you do have confirmations such as Jamie Setley, who's very experienced in terms of using Elliott waves, that does warrant some attention and a way that we might look for ways that we might be able to get an entry. So what I'm going to do now, looking forward, and this is what I'm personally doing with the pair. I'm going to just zoom in a little bit, and again, this is very short term. But what I might do, if Jamie is calling for this to be a potential low in the pair, what we might do right now is just draw simple Fibonacci lines, and we can see now the 61.8 is at about 28.33. So over the next couple of hours, we might look for a move down to that 28.33, 61.8 fib. But again, this is very short-term analysis. You have to be able to abandon it in a moment's notice. Nothing will prevent this market from dropping again to a new additional low. But again, the reward on the other side is very high in case Jamie is right with his count here in terms of that reversal, in terms of the reversal on the daily candle, the reversal day on the daily candle that we had today. So that's a price level that we can look at, a potential area of support at that 61.8 moving forward. And to get a little more in depth as what you might do when prices come down there and test it, what I like to do personally is let prices test that 61.8. You might have a brief penetration of the line, wait for the next candle to wait for that candle to close back above the 61.8, and once you do that, you can enter with a stop below the low of the candle that did breach the 61.8, and that can help you control your risk. You might not be risking very many pips, maybe let's say maximum 30 pips or so, and again, the upside is tremendous on this trade, so that's something to look at. Now let's go to the dollar yen. And again, this is what we've been focusing on lately. If you recall, in yesterday's report, I've actually switched the format here so you're able to see all the lines. In yesterday's report, which is located just above this one, I was highlighting this potential area of resistance, and we can see it's not extremely clean, as prices did peak above it just by a few pips over here, but it did definitely contain the pair, and we could see a sharp sell-off from that resistance line. So what do we do right now? Moving forward, the more times lines like this are tested, the more likely they are to fail. So again, I would still maintain that bearish bias against the 97.85 low over here, but again, my confidence would be a little lower compared to last night. And again, each and every day, keep an eye on Jamie's reports in terms of the dollar yen, because he is calling for that massive fall. But it doesn't mean that it's going to happen tomorrow, and it certainly doesn't mean that we're not going to be stopped out before that happens. So what we have to do is get good entries with proper risk to reward, and an entry such as I suggested last night at that 97.85 area would be one of those types of situations. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.